but we have a Fed decision coming tomorrow. We have a little bit of suspense around it. How do you think it's going to go? What do you think it's going to mean?
Well, Mike, maybe we'll just start with a little historical context, which is that, the Fed has never started a modern cutting cycle, that is since 1994, with a 50 basis points move, unless it came at an unscheduled meeting or it was preceded by an unscheduled meeting, as in 2007. And at that 2007 meeting, that unscheduled meeting, they obviously discussed stresses in the housing market. And it would appear that no such stresses exist now. So to put it in perspective, a 50 basis point move, which is what Fed funds futures markets are more or less pricing in which many on the street are calling for as necessary given this slowdown they're seeing, it would be very, very unusual. And, I think the Fed ought to be loath to do anything unusual in an election year.
And so if this move, let's say it's in smaller increments, it's been sold as kind of a normalization process. This is insurance cuts. It's not something because the economy is really weakening. Do you buy into that being the environment into which the Fed is easing?
Well, Mike, I do believe the economy is slowing. I do see softening signs in the labor market. The high-frequency data has been showing that for months. But what's very interesting is when you look at initial and continuing claims, initial claims have done nothing close to what I would have expected at this point. There's been no acceleration there. Payrolls have obviously been weakening. But, Mike, this is not really the environment where I think the Fed needs to do a 50 basis point cut as a preemptive measure when historically it's never done so. So I think 25 makes sense. But unfortunately, I think there's a coin toss here. I think it's a 50-50 chance they actually go 50 basis points.
And what does that mean for you, just quickly, in terms of, investment tactics at this point? Do you still like government bonds after this huge rally, or corporates?
Yeah, we talked about that in sort of mid-late August. And 10-year, we liked extending duration, and we liked owning the 10-year. I think a bunch of that is priced in at this point. When you look at the shape of the yield curve, I think we're about 120 basis points inverted still from 3 months to 10 years. So I think that tells you, a lot of cuts have been priced in our view. I think the 10-year will get better bid as the economy continues to slow. So we like that as an intermediate to longer-term trade. But I think for now that will be a bit played out, and that we've exited that trade at least for now. Cautious re-entry.